Welcome and good morning to our Kalifa Review webinar. My name is Tom Shave. I'm the Head of Fintechs at S&W and will be your host today. This is a really exciting time to be in Fintech. We've had an amazing response to the webinar, which demonstrates both the level of interest in our sector at the moment and the strength of our panel. And what's not to like about Fintech? The UK is a dominant force in Fintech, generating £11 billion in revenue and representing 10% of global market share. But we want even more in the UK, and hopefully today we can cover some of the ways that the UK can achieve that. We're hosting this webinar with Fox Williams, who we do a lot of work with in the Fintech space. And I'd like to invite Andrew Wolf to give a brief overview of their services. Andrew.
Thank you, Tom. I'm Andrew Wolf. I'm a partner in the corporate team at Fox Williams, and I've been working with fintechs for almost 20 years now, helping them raise funds and buy and sell businesses. We're really pleased to be co-hosting with S&W, and as Tom said, we've worked with them on numerous occasions, and very much so in the fintech space. And we're very appreciative of our distinguished panel for joining us today and making time. I'm sure it'll be a very interesting and engaging discussion. I'm sure that there'll be a lot of my colleagues from Fox Williams attending today. Fintech's really at the heart of our practice, and most of our lawyers work with fintech businesses in one sort or another, and we're recognised as fintech specialists. We have a dedicated fintech team, which John Segal on the panel leads, and we're supported by a very strong financial services practice, for whom we're the regulator. We work with all sorts of fintech businesses, many of whom are household names, and many of whom will hopefully be household names in the future. We've also been named AltFi's Law Firm of the Year 3 times in the last 4 years. So I'm sure today will be really interesting, and I'll hand you back to Tom. Thank you.
Thanks, Andrew. And for those of you that don't know S&W, we're a pretty unique firm that combines both investment management and professional services. Our focus is working with a wide range of fintech founders and the people behind the businesses and the businesses themselves on a range of financial, business, accounting, tax and advisory services. We're really proud of our fintech client base, and our clients range from relatively early stage businesses through to unicorns. So turning to the main event, we'll first hear from Ron to give us a bit of background to his review before discussing some of the key themes with Sten, Tim, Karen and John. We'll also be inviting comments from the audience, so please do feel free to use the Q&A chat function. Ron, if you could now switch your video on. And firstly, Ron, thank you very much for agreeing to be part of the discussion. It'd be really interesting if you could give us a bit of a background to the review and your involvement. And I'd also really be interested to hear how you even define fintech and what it covers.
Good morning. Thank you very much for the opportunity, Tom, Andrew, for being with you, and for the others who are on this panel as well. A question, as you rightly say, is that what is fintech, and frankly, why does it matter? The answer I tend to give is that fintech is the future of financial services. It shouldn't be considered niche nor a subsector. It is permanent, and it's changing the shape of finance. In many ways, it's not just about startups. It's about the investment and the use of technology by our incumbent institutions. It's in many ways the way we regulate new technology and set new standards. But most importantly, I think it's about delivering better, cheaper, more efficient, more inclusive financial services for customers, especially consumers and SMEs. As a sector, it's a large sector. It's already growing rapidly. It's worth about £110 billion today, globally. By 2030, that's going to grow threefold, at least threefold, as conservative estimates, to about 380 billion. We've got a very strong position here in the UK. We're dominant in many ways in terms of we've got a 10% market share. And the strength, I think, is underpinned by several specific factors. One of them is that capital and investment in the UK fintech stood at about $4.1 billion last year. And that level of investment was something in the region of more than 4 times more than the combined investment of the next 4 European countries combined. So if we were at 4.1, Germany was at 1.4 billion, Sweden was at 1.3 billion. So you start to get a sense of the scale of the opportunity. The other thing is that we've actually got a very strong capability set, both in the form of financial capability, financial services, and technology talent. Thirdly, I think we've set the benchmark in the UK for policy-led innovation. Key initiatives such as the FCA regulatory sandbox and open banking. It's interesting, when we first launched the sandbox in the UK, which was in 2017, it was the first of its kind. Now there are 50 sandboxes around the world. Additionally, demand for SMEs, consumers and corporates is exceptionally high in terms of using fintech. And what's I think staggering is that 71% of the UK's digitally active population use at least one of many fintechs. It might transfer money around the world, it might be to do online banking, it might be supporting SME lending, whatever it is, but it's actively being used. And the final point, I think, is that COVID has done nothing apart from accelerate the adoption of digital activity. Whether it's team calls, Zoom calls that we're living through on a daily basis multiple times, or online banking. What happened was, in the first year of lockdown, which was exactly a month ago now, there was something like 6 million people, 12% of the adult population, downloaded a banking app for the very first time. And it kind of shows a behavioral change, I think, that's happened. And the consequence of that is that I don't think we're going to go back. So, Tom, in many ways, I think that's the way that I characterize the sector and the segment that we're in.
And Ron, it'd be really interesting to understand, how's the review being received by the government?
It's a difficult one to answer, because you don't really know till the response comes back. So the report went in a couple of weeks ago to the Treasury. Obviously, they have got to read it, go through it in detail, talk to other departments. It was issued the day before the budget. The good news is that the Chancellor came straight out the next day in the budget speech and made a reference to a couple of things that were in there. So specifically, I'd made a recommendation about tech visas, so that there's an opportunity for companies that are recruiting people on the back of the opportunities that they've got to basically recruit people at a faster rate and go through the whole process because of Brexit. So he announced that. The listing rules were something that I had also referenced and have encouraged in terms of recommendations. Jonathan Hill's report came out a couple of days after mine as well. And I think that's been well embraced, both of those. So I don't know the full extent of what's going to be encouraged, adopted, or rejected. But I think we'll wait and see. The way that I tell the story or characterize it is that it's a bit like writing a letter to Santa in the form of a review. You send the letter in, you wait for Santa to really wait and see what happens on Christmas Day to see what presents come. Christmas Day hasn't come yet, but I'm expecting it to be in the next couple of weeks.
So if we played forward 2-3 years, Ron, what would be a good result for you in terms of the UK fintech market, and as a result of sort of the things coming out of your review?
Yeah, the reality is that the review is not really a list of recommendations, but it's more focused on a strategy for a sector which, as I said, is growing. So it looks at policy and regulation, it looks at skills and talent, it looks at investment, it looks at international attractiveness, and it looks at leveling up. So those are the 5 chapters that I've tried to cover. And what I'm trying to get to, or I hope we can achieve, is really to have a much more coherent strategy about how do we take forward an area that we're very strong in. There aren't that many activities that I would say the UK leads emphatically in. This is one of them. So what is it that needs to be done? And it's really about a focus. It's really about coordination. It's really about activity and support. It's really about some regulatory changes. I've tried to work it so that something like, I'm only asking government for about 20-25% of the overall ask. Much of it is for government to convene, to create sort of mandates to support what is the sector that we're talking about, but also to basically just give it the oxygen that it's needed. So success for me would be about thinking about this no longer as fintech, but actually as the future of financial services. You know, it's interesting when you talk to some CEOs of some of the very large banks in the UK, they refer to themselves as a fintech. Now, a few years ago, many of you and many of us would have laughed at that, but it just shows the shift, I think, in minds and the mind shift that's happened for them to start talking about themselves, because essentially it's about financial services and technology. It's interesting. I think the thing that surprised me is that as I went around and talked to many founders, they tended to think of their businesses much more, fintech founders, much more as a tech business as opposed to a financial services business.
Yeah.
And you know, that's at the heart of the change that I think we're starting to see.
I agree. You also raised some really interesting points, and at that stage, I'd like to invite the rest of the panel to join us, and perhaps we can pick up on some of those points. So welcome to Tim, Karen, John and Sten. One of the key themes that you raised in your review, Ron, was around investment. And I thought there were some really interesting findings there. I think you did a review where it said that 53% of entrepreneurs said their most likely exit would be to sell out to a foreign trade buyer versus 17% to an IPO, or further 16% to a UK trade buyer. That feels pretty disappointing, I think, from a UK mindset. You also made some reviews, some recommendations around changing to the listing reviews, as you mentioned. That's been picked up by the Hill review. And if we look at what the US does, that's 39% of tech IPOs versus 4.5% in the UK. Plus, just overnight, we've had Alex Chesterman, the Kazoo founder, saying that the UK is not really the place for tech listings. It feels like we do need to do something about this. And given we've got a lot of entrepreneurs on the line, I think it's a really important subject. Tim, I'd like to come to you first and really get your thoughts on the recommendations around the listing changes and where you see that going, given that you've got a lot of investments in UK fintech businesses.
Thank you, Tom. Good morning, everybody. Yes, and I don't think we should narrow it just to listings. I think, you know, as Ron has said, we have come a long way in the last few years. I think for us, as the only publicly listed fintech-focused venture fund in the UK and arguably in Europe, we see very much the positives and some of the shortcomings, you know, of the London listed market. I think what we find ourselves in now, and I think coming to the end of Q1, and you know, the numbers haven't been tallied yet, but you know, it's our expectation that we will have seen a record quarter in investment in fintech in the UK and likely elsewhere in Europe. So we are in a sector that is hugely buoyant, that is attracting you know, enormous inward investment, not just you know, from kind of UK funds and European funds, but increasingly from North America and Asia as well. So we are and have put ourselves in a very strong position. I think the challenge specifically for exits has been, yes, historically, Europe hasn't seen anywhere near the level of IPO tech exits that we've seen in the US, but I think there's a much greater recognition today that is something that needs to change. I think if you look at historical you know, exits over the last 5 or 6 years, the vast majority of fintech exits and largely tech exits, but fintech in particular, are not coming to the public markets. And I think that is an existential challenge. And I think that's partly one structure of you know, of our listing rules. But more importantly, we're seeing more capital at a later stage than ever before. So what we defined as growth capital, the size of the checks are far bigger. They're coming later in the cycle. I think you can point to a couple of good examples, whether it's TransferWise, you know, whether it's Stripe, or you know, whether it's even Klarna in Sweden as well. These are businesses that are raising very significant later stage rounds, you know, north of $1 billion that historically would have only been able to be possible in the public markets. So you do have this wave of very significant capital in a macro environment where investors are looking for yield. They're moving towards growth. They're looking at tech, and in particular fintech. And I think when we see one of the shining stars, as you've alluded to, and obviously Ron has been helping really advocate and build around. Fintech is a shining star of UK PLC. It presents a huge opportunity, and as such, global investors are looking to the UK, not just about building UK fintech businesses, but about building global fintech businesses from the UK. And that's very exciting. But ultimately, from my perspective, I would love to see a buoyant UK fintech IPO market. I don't think it will require tens of fintechs to come to the market, but we definitely need more than a small handful. And those that are truly fintechs, truly businesses that are disrupting and disintermediating the financial services sector, not necessarily just those that self-proclaim themselves as fintech. So I think we have the building blocks in place. I think there is, a huge amount of capital. I think your point that 53% of founders are looking to sell out to an overseas investor. I hope that number reduces over time as there is more access to domestic capital. I think one of the initiatives that Ron has pointed to is unlocking our pension funds here in the UK to be able to invest more freely in venture capital. I think that's hugely important and something that we've been supporting and championing for some years, and it's very consistent with the British Business Bank's patient capital review as well. So I think we're moving in the right direction. There is a lot of work still to be done, but certainly if I look at where we were 3 years ago on IPO and where we are today, it's never been a better time to build a fintech business in the UK.
Thanks, Tim. Sten, I'd like to bring you in at that point as a fintech founder in the UK, and get your views on it. Do you share the views of your other entrepreneurs who were surveyed by the review, and share Tim's views around the benefits to the UK? It'd be great to hear from you.
Yes. Good morning, everyone. I'm Sten, and co-founded Zego almost 5 years ago. And we just closed a large round of funding. But what we do, we focus on commercial motor insurance, all the way from enterprises to self-employed customers. It is very interesting what's happened over the last year and also before that. So, for example, I raised Series B round, which was 2 years ago, and I was being on a road trip for a couple of months. And then having lots of interest from Europe, less so from the US. Now, when I did the round in January, it was all on Zoom. And I did not meet any single investor face to face. And I had huge amount of interest from the US. So this concept of I have to be close to the company I'm investing in has disappeared. Hence, has made kind of US investors to look across the world, not just geographically being limited. And then US investors are generally more kind of aggressive, more bullish. They almost set the bar. Previously, the geography was the hurdle. Now it's not. And it's the same with the listings, right? So if they've done so much with listings, they've done so much with SPACs and so forth, and it's almost like that's the kind of a bar they've been setting, and entrepreneurs are there to build great businesses. They are looking for solutions for their talent, for the operations, through the kind of a governments and everything else. So they are there to build the best possible business, and whatever environment enables that, they'll go for that. It's just like that's in the nature, and it is very it was exciting to see Deliveroo to go list here. Then you see Kazoo going in the US, a British company in that regard. So I think the thing what I'm trying to highlight is the pace. So first of all, the bar is moving, and the bar has moved because geographical limits have been removed to talk to different investors. Secondly, the pace things move at has massively accelerated. It took for us to go from first meeting to a term sheet. It was a single days that it took, right? And then when I spoke to co-founder last night, started last Monday, by Sundays, 13 term sheets. So it's like wow. The pace as it moves is so rapid at the moment, and that's the kind of expectation of bar that's being set. So I think we need to make sure that we don't fall behind.
Karen, what's your views on this, and perhaps your experiences of fundraising as well, given your experience at Moneybox?
Yes, so good morning. I'm Kerrigan, CEO of Moneybox. We're a saving and investments app. We enable people to put their money into a load of different products, from ISAs to cash accounts, pensions, and we've recently launched a mortgage service. So we raised 40 million last year. Part of that was a £7 million crowdfunding round. So, we very much are an exclusively UK-based business in terms of the products we offer and where we see our growth. But what was interesting about that experience of fundraising is, doing it all online again, as Sten said, did open up overseas investors. So we brought, some European investors, both on the kind of institutional side, but also on the retail side. So whereas I think, before we would have exclusively seen ourselves as, if we were to list, it would be UK, suddenly the world has opened up somewhat, almost without us realizing it. So just by way of background, I'm a former financial services lawyer. Started my career in the peak of the financial crisis. For the past 8 years, I've been in fintech. Before Moneybox, I was general counsel and then COO at Segal, and also sat on the board of the UK Crowdfunding Association for 5 years, where I did a lot of regulatory and governmental engagement, both in the UK and in Europe. And what I've seen over the course of particularly that experience is that the UK really has been at the forefront in terms of pushing, not just traditional means of investments, but opening up capital markets in a far broader sense, putting Europe on the roadmap versus the US. Since Brexit, obviously, there's a little bit of kind of repositioning that UK PLC needs to do, and I think it's about thinking, what does the UK want to be? What does Britain want to be going forward? And I think one of the things that I think Ron said was around, this isn't just about fintech. This is about the future of financial services. We have a 300-year history plus of being leaders in financial services. What do we need to do as UK PLC to make sure that, in the absence of being a lead manufacturing environment or being at the forefront of the energy transition, we're not building turbines, we're not, creating Teslas. How do we accelerate what we're good at over the coming years?
Well, and that's particularly important as we come out of the pandemic, I think, and making sure that we capitalise on those, Karen.
Yeah, I think the pandemic is very relevant for a couple of reasons. I mean, I think the first real acceleration on fintech we've seen in the last 15 years or so was the global financial crisis. That's where we saw this big wave of the early fintechs, or the early sort of this batch of fintechs, I should say. We are now seeing people in a COVID era becoming more interested in their finances. Whether that is day-to-day trading, or whether that is actually moving their pensions, spending time consolidating where their pensions are at. But I think people's interest, people's force to go online in terms of how they manage their money, so how they manage the money, but also where they put their money, has become very prevalent.
Yeah, agreed. Ron, we had a question around the IPO rules and your recommendations, and why you've gone down the sort of US route of the US style pricing mechanism. I don't know whether you've got any thoughts on what sort of drove your recommendations around the listing piece.
It was, the whole review was based on trying to get to some actionable conclusions based on inputs from the consultation that took place. And I think the thing that was very clear was that there was a consistent message, which sort of touches a little bit on Tim's point, which is there's a growth capital funding gap, at the sort of Series C plus stage. Forget the very high end at the sort of private equity level. But the thing that kept coming back was, please help us by reducing the free float requirements from 25% down. I've elected to go 25% down to 10%. That was one of them. And then the second one was around the governance rights in terms of golden share. And those were consistent things that kept coming back. So I looked at the data, and I think you referred to it earlier. When you look at the number of listings that have taken place here in the UK over the last 5 years, it's something in the region of 3,000, sorry, across the globe, there have been 3,300 listings. across the globe, on the world's major exchanges. The US has had 37%. We've had under 5%. Now, that's not to say, just to Tim's earlier point, that's not to say that the listing rules are the only thing, but these are all small contributors that as people are starting to think about, where should they list, they start marrying that up. Then, plus the challenge that Sten talked about in terms of the kind of the aggression in the States that you see from either the bankers pushing it, if you want to think of it that way, or frankly, the comps that are there, the higher multiples, you start to sort of, get a bit dazzled by what could be there. So we've got to get to a place where we want businesses to be here. Karen's point, I think, is right, that why shouldn't the UK be a place where people grow their business? It's been a great place for people to come and grow their businesses, but Brexit's created some challenges, and we just need to make sure that we look through that lens and carry on focusing on it. So it was based on a series of consultations and the perspectives that were coming through very strongly.
And thanks, Ron. Someone mentioned SPACs earlier. SPACs, good or bad thing? Should the UK be exploring that? Tim, I don't know whether you've got some views on the SPACs.
Yeah, well, we don't quite have enough time to dissect it fully. I mean, I think we clearly are in the hype cycle of SPACs, and I think if you look at the structure we have currently, London isn't particularly conducive to SPACs, and there is work in flow to address partly some of that. I think the European hub for now is centered around Amsterdam, and we've seen the first launch of a handful of SPACs, but obviously the center of gravity is in the US. And I think the danger is what we are seeing is a huge amount of SPACs being listed and a dearth of SPACs being completed at this stage. They have 2 years to find their target, and then you are seeing those tech companies reverse in, and there are a number of fintech targets being mooted. I think all I can speak about from our perspective is the inbound coming in, and I think either from our side, SPAC is not the right route. If you've got a UK European centered business, does it make sense to list that in the US with US investors who don't necessarily have an affinity with European business? Of course, if there's US angle, that's a different case. Or you sit there and say, actually, the business isn't ready. This is an expensive way, but an accelerated way to get liquidity. But ultimately, it's a short-term view. So I think they will play a role. I think they have an effective purpose. But for those that sit there and criticize and say London doesn't have the right structure for SPACs, I think there's some validity there. However, at the same time, those that sit there and say, well, London is the gold-plated, blue chip exchange, we don't want these SPACs here, again, are kind of missing the point. We need to be fast-moving. We need to be entrepreneurial. We need to put the right measures and structures in place to ensure that if we do list SPAC-style structures, they are launched in the right way. And I guess the tangential point I wanted to raise, and Ron talked about it, there are lots of kind of iterative and incremental steps to help us become a more effective listed environment here in the UK, has been educating both our institutional investor community, but as importantly, our analyst community as well. This is an environment that where we haven't had tens, if not hundreds, of tech listings over recent years, and that is a challenge because if you look at the US tech analyst community, they very much look at the glass, half full view, and I would think many analysts here would look at it glass half empty. If you look at any headline which talks about one of our fast growth tech companies, fintech businesses, often that headline will be about the losses that they've incurred, not about the opportunity ahead, the investment that they're making. And so we have a role to play in influencing in the right way our analysts, our journalists as well, to really kind of espouse the positives and the potential of this asset class as well. So one change, one initiative is not going to solve the problem, but there are going to be multiple steps that we need to make as an industry in order to kind of help that happen. And as I said, I think we're on the right path to that, but there is still a long way to go.
Ron, do you want to add some thoughts to that?
Yeah, just very quickly. Look, I think Tim's spot on. We are quite shy and quite down and negative about some of the successful businesses that are up and down the country. You've only got to look at the press in the last week around Deliveroo. I mean, you'd think that was just a tragedy. Now, whether you agree with the proposition or all the rest of it, the issue is it is a business that created jobs. It's a business that's basically thriving. Sure, it's come down a bit in terms of its valuation, but that's just a market force thing. So I just think that there's got to be a much more upbeat position around the businesses that we've got. If you look at the way that the US operates versus the UK in terms of that, we've got fantastic businesses who are on this call. And why are we not able to, why are the politicians not able to talk about them with much more passion, much more enthusiasm, to talk about the stories, to bring these things to life? So I think that's a mind shift that we have got to generate and create.
Sten? Oh, you're on mute, Sten.
Yes, so I was going to say that I feel like there's a sense of like feeling not being the first anymore, but being second, because US has done something. It's almost like when you invent a smartphone and initially just use it for phone purpose, and then the manufacturer puts a camera on it, and you don't have a camera, then you're like, oh my God, they've got phone plus a camera. How much more exciting? And I think it's the same situation here, whereby like, well, we've got the kind of environment here, but it doesn't serve certain purposes for certain types of vehicles, like SPACs, and that's a kind of the starting conversation. In my opinion, SPACs are not. It's just a type of vehicle to serve a purpose, right? It's almost like you can order food, you go to a restaurant, or you order online. Like, it's just a different. You still gives you the objective. Of course, as there's a kind of a massive boom of those, there are companies who should not be doing it. There's companies who are not ready for this, but that's part of a learning curve. Like if we don't, they always say about innovation, if you don't break things, that means you're not innovating quick enough. And I think there is some truth in this too. We have to see some of them completely fail. We have to see like, where do you draw the line when the companies are ready or not ready? But if you don't even have the environment for this to like operate in, then you don't see those learnings. And I think like the point of Brexit earlier, I actually think that there are, talking about geography before, I was able to, when raising money, sitting in a perfect time zone, was able to speak to US investors, Europe, and also Asia, right? It was actually a very good place. And in my opinion, UK still has the kind of a lure towards talent, where people want to be here, or like people want to work with UK companies. And if we, on back of the Brexit, we do certain changes, we can massively accelerate our position further from here, in my opinion, by being the kind of a global kind of a gravitas.
And perhaps we can return to that theme later on, Sten. I want to now turn to policy and regulation, and really turn to you, John, as someone who operates at the coalface of fintech, advising them on innovative new products. Which of the recommendations on regulation and policy do you think will make the biggest difference to your clients? And also conscious we've had a few questions on this already, so it's great to hear your thoughts, John.
Thanks, Tom. So I'm John Segal. I'm a partner at law firm Fox Williams, and I head up the fintech and alternative finance team. And as Tom has mentioned, I advise lots of fintechs and alternative finance platforms, really from startup to scale up through to kind of growth stage as well. And there's some really interesting things in the Kalifa report. I can just pick up a few of those on the regulatory side of things. I think digital identity was one I was very, very, very keen on, and Ron highlighted that's important. I think both for corporates and for individuals. And I think if we are going to have a frictionless digital financial services economy, I think this is going to be one of the foundations and building blocks on it. Interestingly, on kind of the more technology and kind of data side, I saw that there was a mention of using a decentralized system for storing it. So again, I thought that was very, very, very forward thinking, and I think that would allay any concerns about the sharing of sensitive data across multiple entities. The next one I thought was interesting was kind of trying to find the right size for regulation. So ensuring regulation is right size for the size of business and for the risks involved. We do see a lot of structuring within fintechs who are trying to avoid essentially becoming a bank. So they might become a payment services provider or an e-money provider, might become a consumer credit provider. But really, what they're doing is banking services. And I think the current regime is too strict, particularly around the prudential rules and regulations. And so it's a good entry point to avoid that. But I think if we can kind of right size and reduce the regulatory burden for smaller businesses who aren't perhaps taking on such risky activities, I think that can only help grow the industry. The third one I thought was super interesting was the scale box, which is essentially kind of a supersized sandbox. But I think that there are probably some issues with the sandbox that need sorting out first. The anecdotal evidence I've got from clients is that it's really just simply a badge of honor for investors. So people can kind of go and play in the sandbox, get used to using the regulations, and used to being having to comply with the rules and regulations of the FCA. But really, that there's not enough kind of time spent from the FCA with them to really understand the products and to kind of help them. So I think we really need some investments, both the sandbox and the scale box level, of the FCA and other professional advisors really kind of coming around the fintechs and really providing lots more coverage and lots more advice. Obviously, I'm not quite sure who's going to pay for that. That's obviously a nice to have. But I think if we are going to see that kind of supercharging the fintechs, to become the next unicorns, I think that's going to be pretty important.
And Karen, it'd be really useful, interesting to hear from your perspective on this, given your legal background as well, of how you found the regulatory environment in the UK for the businesses you've been involved in.
I was slightly smiling there when Jonathan said about the badge of honour. Going through the sandbox was a badge of honour, because yes, the sandbox was launched in 2016, 2017, but before that we had what was called Project Innovate, I think back in 2014, and the fintech community at that time was very sceptical about this Project Innovate. It felt like a surreptitious supervision. So the fact that we are now talking about this as a badge of honour is fantastic. It's a step in the right direction. I hadn't heard that, but that's actually excellent. But it has been copied elsewhere within globally, and I think that the review is right, and the point that John made is right, that this idea of a scale box is the next stage for that. Now, I think that rather than having the XX badge of honor of belonging to the scale box, we do need to think a bit more carefully around what this scale box is actually going to do. And I think one of the biggest things is around competition. So what does that mean in terms of businesses ultimately collaborating, coming together at future states, or acknowledging that at the moment a lot of these businesses are breaking into quite nascent markets, so will inevitably be subscale for a period of time, and therefore unable to deliver the best outcomes for customers unless they are enabled to come together. But also what that means on a practical level. So I think that the FCA does have this very clear competition objective, but how it interacts with the CMA is less clear. So we've spoken a couple of times about pensions and both the difficulty with accessing pensions, but also the opportunity for pensions in extending the reach of capital markets investment. And I think that what the FCA could do in combination with the CMA of tapping into the incumbents and putting a bit of pressure on them to release the controls, making transfers easier, making investment opportunities better is fundamental. So yes, I think the scale box is a great idea, but I think it has to be crystal clear in terms of what its objectives are, rather than it being this badge of honor. The other thing that John said, which really resonated, is around professional services. So I think lawyers, compliance advisors, consultants, financial services firms have been quite quick to see the opportunity within fintech. I think one of the areas of professional services that is really lagging behind here is audit. Now, audit has gone through its, or audit firms have gone through their own crisis over the last few years, including kind of talent access. You've seen sort of Wirecard in Europe. We've seen, Greensill more recently within the UK. So there is a lot of pressure there, but I think that there is also a massive opportunity. I mean, even just forget the statutory audit, but looking at kind of the CAS audits that these businesses are going to be needing over the coming years, upskilling not just our technologists to build the platform, but our audit governance structures around to scale those platforms is going to be crucial.
You'll be pleased to know, Karen, that we're investing a lot in our audit practice at the moment to make sure that we're, at the forefront of auditing fintech firms.
Always be selling, Tom.
Yeah, that's it. Professional services firms never miss a trick.
Tom, I might just jump in briefly,
sure.
And just on regulation, the role of the FCA. I mean, let us not forget that regulation held back innovation for many years. One of the reasons why financial services has been so slow to disrupt relative to other industries. But of course, ultimately the role of the FCA is to protect the consumer. And I think they've largely done a pretty good job as a result of all the innovation over recent years with very limited resources. And I note the comments that the FCA doesn't have sufficient resources to keep pace with the industry, but the industry is always going to move faster than the regulator, and we need to have that push and pull dynamic. And no question that fintech, the regulatory sandbox, and other initiatives have been very good PR for the regulator, for the FCA, and in some parts they've done a very good job. But what we need to do now is recognize that we have built that brand on a global stage. We need to build an infrastructure that is fit for purpose, that can grow not quite at the same pace of our industry, but at a sufficient pace that they can support what is a burgeoning and emerging industry here in the UK. And I think ultimately that's where the investment needs to go. But I can't see a scenario where the regulator is ever ahead of the game. And we as an industry, we as investors, we as entrepreneurs, we've got to continue to push the boundaries. And I think often we quite effectively self-regulate ourselves. And maybe this is a controversial thing to say, but I'm surprised there hasn't been more blow-ups in the last decade, to be perfectly honest. Of course, we've had some high-profile ones in the past in terms of Wonga, and of course more recently in Germany and Wirecard and Greensill, and we'll see how that plays out. But ultimately, I think the industry is quite effectively self-regulated, whether it's the likes of equity crowdfunding, whether it's the likes of peer-to-peer lending, all of whom kind of created their own bodies and really drove for regulation. And I think that is very much the path that the industry needs to take, where they're doing something so innovative, they need to be on the front foot, work with the regulator, help them think through it and understand it. And I think if you have that dynamic, then you're in a far better position to allow the regulator and associated bodies to work with you and give you a long-term structure to succeed.
Sure. Thanks, Tim. I'd like to turn now to sort of skills and talent, and perhaps Ron, just bring you back in to really get a sense of where we are with the visa. Rishi Sunak's announcements sounded very positive, and that's clearly a critical part of any business as they're trying to grow their businesses in the UK. And is there anything else that we can do to encourage talent in the UK? We've also had a question around, even before people have gone overseas, how do we make sure that we maintain UK entrepreneurs in the UK and not let them leave, and make sure that they're growing their businesses in the UK? So really interested to get your thoughts on that theme and the review, Ron.
Yeah, thanks, Tom. So through the work that we did, there was some very interesting data that came out, which is that last year, 43% of job adverts from UK fintech scale-ups were looking for data skills. 44% were looking for technology skills. 35% were looking for business skills. So that was a clear gap that we've got. And I completely take the point per the question in the chat box about we need to build a pipeline, but that's going to take a while. So the question really is, what do we do in the meantime to ensure that we've got the capabilities? So one of the recommendations is to find a way to retrain and upskill adults to support our sector by ensuring access to short courses from education providers at a relatively low cost. So this is, if you want to call it, buying in bulk to do that, to be very specific. And we've created some suggestions as to how to do that through a digital exchange, essentially, to do that. The visa stream is an important one. You know, pre-Brexit, hiring EU talent was simple. Thanks to free movement, EU nationals could relocate around Europe for work without permission and at relatively no extra cost. Brexit has marked an end to that. It's added significant barriers, including cost, about £10,000 now, and approximately 8 weeks between UK employers and the potential EU talent coming in. To mitigate those, we've suggested that the Home Office introduces a new visa stream that will fast-track visas for international fintech talent if they fulfill a bunch of criteria, which is being worked through as we speak. France has got a tech visa, Canada's got a global talent stream, Australia's got a global talent program. So those are some of the things that we've got to compete against. Not that people are going to go and locate their business there, but we've got to just keep up to date in terms of what's going on. And the last one is really to build a pipeline of talent for a longer term scenario. This is a journey that we're on by supporting high growth firms to offer work placements to students and to Kickstarters. And I think those are likely to kind of come through as well relatively quickly as well in terms of announcements, I hope. So we're working through those, but I do think that this is proving a point that we've got such an opportunity to do something. We've got the capability, we've got access to one of the best, some of the best universities up and down the country. And the demand for retraining and upskilling is going to be so high over the next 10 years. So that's how we thought about the skills chapter.
Sten and Karen, I'd like to bring you in on this conversation because talent's obviously really important for building your businesses, and also really a part of that, understanding how COVID's affecting that and where you're hiring, how you find attracting talent into your businesses. Perhaps we can start with you, Sten, and then come to you, Karen.
Sure. So we are 275 people at the moment. We've got 36 nationalities working for us. Pre-COVID, we were 100% London-based, so everyone was coming to the office. And now we've got 60% who has London address, essentially. So we've doubled the team since the first wave of COVID, and majority of the hires have been not London, they've been across the country mostly, and also other markets, countries in Europe. In terms of the kind of Brexit element there, I think we operate also in several other markets in Europe. So I could see us hiring, so the decision we've made moving forward will be remote first. So we don't have the intention to go back the same way to the office like pre-COVID. And hence, hiring people in the UK across the country, also hiring in Europe, is actually quite straightforward. They don't even have to physically relocate to the UK for us because of that, because of the great time zone, ±2 hours, and you can get everything done. What is a challenge, though, bringing in talent from rest of the continents. And the kind of a visa element, when I saw this from Ron's report, I was like, great, because that will enable to continue bringing great talent in. I think it's less relevant to be able to bring talent in from Europe, because a lot of those hires, there's remote first logic. They're in the same time zone. You don't necessarily physically need to bring them in, right? You just hire them, and then yeah, that's how we're thinking about talent.
Karen, where are you with your talent acquisition?
I would echo everything that's Sten just said. It's exactly the same for us, including the fact that we have doubled in size over this period of lockdown, and that we are hiring all over the place. But I think that when we think about our remote return to the office strategy, so remote first, hybrid working, however you want to define it in the new world, tech is different. So we're looking at it as a completely different bucket to other modes of the business. So whereas if you think of a remote strategy for, let's say, I don't know, customer service or even compliance, one of the factors you're thinking of optimizing is going to be cost. If you hire someone in Glasgow for customer service or even for compliance, they're likely to be a lot cheaper than they would be in the UK. So that's an advantage for the business. What's interesting in technology is cost doesn't even form part, or cost savings doesn't even form part of our remote strategy with hiring. It's opening up opportunities. It's talent pool. That's the reason that we're looking elsewhere, both in Glasgow, but also in Croatia, and also in South Africa. Our costs are likely to be the same, maybe a slim saving in particular areas, but it's literally opening up that talent pool. So I think it is, if we were to stick with UK and particularly stick with London, the tech costs would be would get unmanageable very, very quickly. And already are becoming. So it enables us to sort of manage our cost base. But I think it's an important thing to bear in mind for the UK as it tends to, or as it's sort of going to upskill people and have visas to enable people to work in the UK in technology, because it is helping those businesses continue rather than increase their cost base exponentially.
Yeah, John, do you have any thoughts on the sort of skills and talent themes that were coming out from the review?
Yeah, absolutely. So I think kind of training is probably one of the main ones I'd focus on. I thought was really interesting. I think again, it's over all the different service lines, whether that's kind of law and accounting, whether that's operations, compliance, tech. I think just as an ecosystem, I think the fintech ecosystem needs to support younger people to kind of transition into these quite exciting roles. I mean, if I'm honest, if I'd have been kind of in my early 20s, and I think the appeal of working in a fintech would have been perhaps
not that long ago, John.
Would have been a bigger draw than working in a law firm. But I think these are important things, and perhaps we can see secondments from professional services firms over to fintechs and vice versa.
Thanks, John. Ron, you made some really interesting recommendations about creating a centre for finance, innovation and technology, and would be really interesting to hear from you to flesh that out a little bit more and what your vision for that is and how you see that working in practice.
Come off mute. So the CFIT, the Centre for Finance, Innovation and Technology, was really is a thought based, and it's modelled on the Green Finance Institute that some of you may know. The reality is that there's an awful lot of activity, well-intentioned activity happening in fintech in the private sector. There's 28 different organisations, trade bodies, etc., that are trying to push the kind of activity in terms of innovation across fintech. The problem is that they're well-intentioned but uncoordinated. And this is really trying to be a sort of a clarion call, if you like, to try and bring these opportunities together. Not that we have to consolidate them, but this is a new activity that starts to establish a set of deliverables specifically with a very clear purpose for the sector and I've suggested increasing fintech adoption rate, increasing percentage of SMEs using external finance, doubling the number of fintech unicorns, for example, increasing the number of listings, so many of the things that we've talked about. But by doing it by working with government in a much more structured and coordinated way. And there's a series of things that, in fairness, this is in flight at the moment. So we're working very closely with Treasury to try and flesh this out, to talk about what would people work on, what would the role be, how would it work in terms of SME finance, how do we support SME finance, how do we bring some of these businesses to the fore, how do we think about open finance, how do we think about digital ID. So taking 2 or 3 of these very big themes and driving them through, but also then being the hub for some of the things that we need to do around the skills agenda, for example. So, and also the levelling up agenda. So there's quite a lot of activity that's in play at the moment, Tom, to try and make this come together. But the simple conclusion is, how do we coordinate better? How do we drive activity better? How do we make it much more policy-led in terms of what we're trying to do? And how do we talk to government in a much more structured way?
I mean, it seems very broad in its ambition, Ron. Do you think it's achievable to bring all of those things together with the private sector and the public sector to make that happen across those objectives?
So this would be a private sector activity, just to be clear. there's an ask of something within the public sector as well, which is called the Digital Economy Unit. Because if the challenge exists within the private sector, it definitely exists in terms of lack of coordination and fragmentation, particularly across the key fintech areas. Think about open finance. It sits in FCA, it sits in BEIS, Treasury, and to an extent the CMA. Digital ID sits across DCMS and the Cabinet Office, but with financial services being a key use case, therefore Treasury's got quite an interest. SME lending is across BEIS, Treasury, and the Business Bank. So when you start to actually think about, gosh, how on earth can some of you guys as founders and investors go and talk to government and actually get a coordinated answer? So that's the task of trying to bring the public sector through the Digital Economy Unit, task force, and frankly the CFIT operation to try and make sure that it's much more structured. So Tom, it is ambitious. I mean, I'd be the first to admit it, and people have said to me, well, wouldn't it just been easier if you just said have a minister for fintech? It's like, well, that's never going to happen. So let's try and be a little bit more structured about what we can do. And my goal, and I hope for people who are on this call and listening, and the hundreds and thousands of people who've written to me as well, just to say, look, if we really care about this sector, which obviously people do, this is, as I said, the future of financial services, then we've got to be more coordinated to try and help move the needle. And it'll only happen by having these type of entities pulling together to try and do things. We can't agree on everything, and there'll be a sort of prioritization of what people work on, but we've got to start somewhere.
Great, thanks. I mean, obviously the UK has been very successful in building the fintech market to date, and the international and national connectivity piece was some key recommendations coming out from that. I'm really interested to sort of understand, and for many of the people listening, what makes the UK as an attractive place to build your business, and perhaps Sten sort of picking you to come in there. What made you sort of focus on the UK as the place to build out, and how does London versus the rest of the national picture fit in there?
Yeah, so especially in financial services, as we said earlier, like it's hundreds and hundreds of years old, especially insurance, where we operate, and that's where it started. That's where insurance started hundreds of years ago. That there is a wealth of knowledge, wealth of expertise, and it's just generally when you want to innovate, you need to be closer to where the market exists. If I'm doing some manufacturing, I'll be closer to where the manufacturers are, right? And in that sense, it's important to be close to. That was a very logical reason why we started here. Plus, the market is large, so it's an opportunity to grow and get significant scale quite quickly in one territory. As we touched earlier on talent, it's a true place for kind of a attraction of talent. Time zone wise as well, it's kind of a well placed. And there's lots of kind of logical reasons in that regard. So that's been great. Now what's happened after, which was a big challenge for me pre-COVID, was that we were very London based, very kind of a HQ heavy, and I've been in companies before where there's like this ivory towerist HQ and everyone else just kind of feels left out, and I do not like that, and I didn't want to build a business where people feel this way, and I was really thinking how to change this. But COVID really forced the change. Now we're all equally on a screen, like whether you're in France or Spain or UK, or it doesn't matter what road, you're equally kind of on 2D screen. And that immediately made it more even, especially with people who were working from other locations. So then we embraced this, and then we went and hired people across the country. We were able to get some exceptional talent, like several hours away from London for the same price, but they were kind of a skill level up one or two, right? And it works for us. So in that sense, it's been positive in a sense that we've kind of dismantled this kind of HQ concept, and we've also grown across the country itself, and makes the international so much more easier.
Karen, would you sort of echo those thoughts from Sten?
I'd echo those thoughts, but I'd also say, and I suppose going back to kind of my prior role at Seedrs, Seedrs funded since 2013, about 1,500 businesses, startups through to scale ups. And I think that sort of tech more broadly, not just fintech, has found a home within the UK and entrepreneurship generally because of the systems and structures that we've set up. It's very easy to incorporate a business. The likes of governmental schemes such as SEIS and EIS investment schemes, R&D tax relief, EMI management incentive schemes for people to incentivize their management rather than paying them huge amounts, are all sort of aspects that the UK is leading on in Europe, and actually in a lot of cases versus the US as well. So again, I think there is the opportunity with Brexit to actually double down on some of those areas, particularly in let's take EIS for example, that was sort of curtailed several years ago as a result of state aid constraints. Sort of fast forwarding to where I am now with Moneybox, I think echo everything Sten said generally around financial services, time zone talents, etc. But the other thing that I would say is if you look at kind of the movement of open banking in the last few years, so PSD2 originally started off as this compliance thing. It then started off as an access. It then became an access thing. It is now an enablement thing. And I think if we wheel back 5 years, we wouldn't have dreamt that open banking would have had the impact that it has, and there is still more to come. What's next? Open pensions, open investments. So I think we've got to keep riding that wave. This is not a time to stop and dwell on how successful we've been in the fintech area. It's a time to accelerate.
No, I agree. And Ron obviously made various recommendations around some of the R&D, SEIS, EIS tax schemes that are out there to make it more advantageous even further. I know that we'll have many people listening who are trying to grow their own businesses to make them sort of successful in the UK. And I'd really be interested to hear from you, Tim, around what is it that you think marks out the most successful businesses, the ones that are going to make it, and what do you look for in those businesses?
I don't think there's one specific answer here. I mean, I think ultimately one of the attractions of financial services is that we're fishing in an incredibly deep pool, and I think every investor will look at the market opportunity and ask the question: can this business truly scale? And I think, as I said earlier, what we are able to do here in the UK is not just about building UK fintechs, but about building global fintechs, pan-European fintechs, pan-African, pan-Asian out of the UK. And I think we've seen numerous examples of that. Ultimately, depending on when you invest, and we don't invest at seed, but typically kind of Series A or later, the earlier you invest, the more reliant you are on an exceptional team who can execute. I think it's rare in fintech to sit there and say, okay, I don't think the market opportunity is big enough. There are huge inefficiencies. There are still significant margins. If you look at the penetration of financial services by disruptors, it's still single digits. Transpose that across to other industries, and you see pretty much every other industry far more disrupted. So we're fishing in a pool of multi-trillion-dollar opportunity. There is a long way to go in this industry, although, and I've recognized some of the questions have said, are we in a bubble? How do you stop the market becoming overvalued and overheated? Of course, when you are in a market that is attracting huge amounts of interest and capital, there are outliers in that, and we're seeing that at the moment. But ultimately, there are going to be many more businesses built over the next 5 to 10 years that exist today in the fintech space. And we're not talking about, billion-dollar businesses. We're talking about multi-billion dollars and tens of billions of dollars. The opportunity is still there ahead of us. So I think, for those, and I know we've got a lot of entrepreneurs, who've dialed in today, but, amongst many of those that I meet, I still feel that there are so many areas of the sector that remain undisrupted. And I think some of that is structural. Some of that is because these are hard nuts to crack. And I think, we've referred to it already across many different dimensions. I think the pensions industry remains one of those stubborn areas that's lacked innovation. And I think we're starting to see some really exciting players come through there. And I think there's some very big businesses to build. But, ultimately, if you pin me down and say, what is the one thing you need? You need exceptional talent who are going to execute in a, in a challenging industry. And although people can cast aspersions on incumbents, they have very significant balance sheets, and one can't be complacent. So there is still a lot to do, but there's a lot of opportunity ahead of us.
Thanks, Tim. Ron, I'd like to sort of turn to you as we sort of reach towards the end of the session and really understand from you, were there any areas that you didn't feel you managed to cover off in the review that you wanted to, or things that you felt that deserve more focus, and we still need to give attention to?
It's a difficult one to answer, because the reality is that I tried, it was a year's work through a fairly challenging COVID experience,
Yes.
which is never easy to do. And also, in fairness, I had some personal challenges on the back of COVID that that I had to deal with. My father passed away halfway through. So if I'm honest, I sort of thought, oh, sorry, I'm not sure I want to carry on with this thing. So I'm glad I did, and I'm sure
we're all glad we did, Ron.
Yeah, I'm sure he's glad I did as well. But the reality is that there's nothing that I don't think that we didn't cover. That I could have gone in different ways, I suppose. But I've tried to capture it through the lenses, as I said earlier, of what needs to happen to policy. Everybody talked about skills and capital and investment as being a key driver. International was so important, because the number of businesses that want to expand and go abroad. It was something like 87% of all the people we spoke to said that they saw that their next wave of growth was come out of the international piece. So that was really important to cover that as well. So there isn't anything in there. I think the big ask is more now, can we as a sector, can we as an industry, because it is an industry, get behind it? Can we try and make sure that we push this ahead? Because, like we've seen, I think with the vaccine and the life sciences, when the UK invest in its potential, it tends to excel on a global scale. And I think this is the opportunity that we've got before us here in terms of fintech, and it does feel like now is the moment to seize it.
I agree. As we, it's coming up to Easter, and everyone knows that Easter Bunny comes at this time of year and brings us Easter eggs and other gifts. I'd be really interested to hear from the panel around if there's one particular area that, from the review or in fintechs more generally, that you'd really like to see implemented. From my own personal perspective, I think the recommendations around the EIS and R&D have made such a big difference to our clients, and if those could be implemented, and it feels relatively easy to implement, then that would be a big step forward for our clients. But perhaps I can turn to each of you. Perhaps I'll start with you, John.
Sure. I think for me, it would be the FinTech Growth Fund. I think that would really help turbocharge, the smaller, more innovative part of the fintech economy. And I think that's going to be pretty key to grow in the industry. I'm going to add one other little thing to that, which is I'm not sure it's mentioned, but that obviously deals with equity. But I think there's a dearth of lending capital in the market as well for lending platforms. And I think kind of 2012 onwards, that was filled with peer-to-peer lending, which I don't think is going to be filled with now. So I think that's something to consider, whether there's a pot of money for lending businesses that they could access.
Thanks, John. Sten?
Well, with fintechs, there's, in my opinion, two key elements, because we're all selling invisible products as such. It's the team and data. There were two big drivers that make companies successful, and to Tim's point earlier as well, like if I could wish, is essentially the visa program, being able to attract talent as quickly as I would maybe hire someone in London to almost as quickly from, I don't know, Latin America, come and move here.
And what was your point on data, Sten?
No, I was just saying that when you deal with fintechs, what you do is you've got two assets as such, is your team that builds your stuff, and then the other one is the data. Those two together enable to build exceptional fintech products. And data comes with team and with the customers, but you need team first to build the products to also enable to get the data. My cynical friend once told me, Sten, all you're doing is selling PDFs, so we deal with invisible products. They're not physical goods, and that's why the data is the goods that you price based on. So.
Thanks. Karen?
For me, I think it is this sort of concept of the scale box. I think that we've had the world where we innovate and we play and we see what fintechs can do, but now it comes to actually enable them. So a lot of these businesses have gone past the startup phase, but there's still a big journey until they're at full scale. What can we do on a governmental, regulatory, competition level to break down barriers to enable growth, and so that they're real players?
Tim?
So I think it's unlocking the capital. I think, I referred to the pension funds having restrictions. Ultimately, we are allowing overseas sovereign wealth pension funds to benefit what I think will be a golden age in venture capital, fintech venture capital over the next decade. And ultimately, as much as they're fantastic for our ecosystem, we should very much be on the front foot there. And I think that is an initiative that has been mooted before, and I think that is essential. It's not just about linked to the FinTech Growth Fund, but more generally, I think allow the pension funds to have the capability to invest a tiny piece of their capital in our evolving ecosystem, and I think you'll see fantastic returns for those funds over time.
Thanks. And Ron, I'd just like to turn to you finally, and whether you've got any concluding remarks around your review and what you'd like to see from it as well, and from all of us from the fintech community.
Yeah, Tom, thanks. I thought you were going to ask me which one was going to be my favourite, and I was thinking, gosh, having one.
I didn't want to put you on the spot, Ron.
Sort of having one child makes you a parent. Having two, you tend to be a referee. And when you've got five, I think it would be unfair to do that. But the reality is that I think this is a piece of work that I think is thoughtful. It is a strategy with a delivery model associated with it. I'd love you guys to, collectively to get behind it, to support it, to encourage government, frankly, to adopt it and to make inroads, because it's only through that will change happen. Government's got so much on its agenda at the moment. Understandably, they're trying, their hardest to keep the economy going, but also to recover it, to level up, to make it global Britain. And I think, many of the things that are in here do play to the themes of jobs, innovation, inclusion, and growth. So just get behind the review, and if you support it, tell people about it, tweet, social media, whatever it is, and just let's get to a place where something actually happens. But thank you all for the opportunity.
Well, thank you to my panel, Tim, Sten, John, and Karen, and thank you very much, and congratulations, Ron, on a great review. I think this has been a really good discussion, and hopefully plenty for us all to take forward. So thank you, everyone, and have a good day.
Thank you.
Thank you. Goodbye.